Only transaction will be there. Without science, if they say yes, I'll teach you something in science, I'll teach you 10 chapters in science, but on the basis of that, do I expect something from you? Yes, I will expect some sort of money, isn't it? Or is
Yes.
it that everybody, and you can go anywhere and you can learn? Is it like that? No, right? Everything is business. It involves, it is under business, right? That means wherever you go, whichever stream you go, it requires. Now, second thing, why particularly accounting? Accounting, in accounting, what are the base of accounting, or we can say pillar? Why do we need? So it is to, basically there are many roles. We say to prepare balance sheet. You would be knowing what is balance sheet, right? Yeah, you will have liabilities and assets. And then apart from this, you would be knowing income statement. You know what is income statement?
And I don't know that.
Yeah, I'll tell you. Have you studied about trading account?
Trading account, I know.
Yes, you would have studied profit and loss account.
Profit and loss account.
Yeah, for in higher level, for both of them, it has been merged, and we call it now income statement. What do we call? Income statement. Yeah, or we also call it statement of profit and loss. Got it?
Yes.
Statement of profit and loss. If you see balance sheet, what are the components of balance sheet? We generally say, we know that, yeah, assets are there, we know that capital are there, and then we also know that liabilities are there, right? But what exactly is that? Why do we need to know if there is a business? Your name is Suhas.
Yeah, Suhas.
Yeah, let's open a new business. I'll open a new business. Suhas company. Suhas
Company Limited.
Company Limited. Okay. Now, why do you need to prepare the income statement, or why do you need to prepare the balance sheet? Even if you don't prepare directly, I'll sell your product, you will sell your products and I'll purchase your product. Yeah, that is fine. Why do we need to prepare income statement or balance sheet?
We can track a profit and loss.
Exactly. We prepare income statement to track whether the company is earning profit or loss. Next thing is whether the company is earning profit or loss, the rate at what, what is the rate of profit or what is the rate of loss. Suppose this year, if we say the profit is 1 crore, this year is 2022, right?
Yes.
2022. Suppose you have got the profit of 1 crore. Next year, what do you expect? Do you expect that the profit should be 50 lakhs?
No, it should be more.
Exactly. As a businessman, or as an accountant, what you need, what you expect from your business, you expect that your income or your profit, it should increase. It is just not mere profit, it should increase. So maybe 1 crore, even if it is 1.2 crore, it is fine, but it should increase, it should not decrease it. Even though, suppose in 2023, if your profit is 30 lakh, but everybody will be worried. Even though you have earned profit, 30 lakh is loss for you or is it profit for you? Tell me now, Suhas. 30 lakh, I'll prepare a new thing. Okay, wait, new page. Now here, 2022, Suhas Company Limited. They have earned, they've got the turnover, let's say net profit. This 1 crore is net profit. Yeah, that's it. Not needed. And in the next year, your company has earned 30 lakhs. This is also profit. But why do we say that this profit is not, expected, or nobody expected, or the company, it is not running to earn this profit, isn't it? So why does it happen? Even though it is profit, even though they've got the profit, why?
Company will be under loss.
No, it is profit. Look here, 30 lakhs. I'm telling you, profit it is. How can you say it is a loss? This year, again, this is net profit. Both of them are net profit. Have I written net loss? No. Why have I written 30 lakh? That is also a profit, but as a company, okay, you don't only expect profit, you expect profit, increase in the profits. Then once your business, it is established, what we expect is profit. After profit, we expect that the profit should increase. That means even if it is 1.1, 1.2 crore, it is fine. Getting that means second purpose is, first purpose is for net profit, to increase the profit. Second is to increase the wealth. This we call it, this process, the profit process, we call it profit maximization. Would have studied in economics, I believe. Next thing is wealth maximization. What is wealth maximization? What is the difference between profit and wealth?
Profit means it is the business earned by the company.
A business, or we say amount or income earned by the company. Okay, that is profit. Fine, I'll accept it. What about wealth maximization?
Wealth means the profit earned by the single person.
No, we don't call. Look here, what is the basic difference? Profit means something you have invested and out of it you are getting surplus. Example, you have invested 50 lakh, you are getting 1 crore. That means that is profit. Wealth maximization is increasing the business, size of the business, increasing the size of the business. Suppose now you are working, you are producing 100 pens in the current year. Next year you expect it to grow it to 200 pen. Then after that you expect it to grow 1000 pen. The moment your production of pen, if it increases, that means automatically your profit will increase, right? But profit, we say in 1 year profit will increase, but can wealth maximization can happen in 1 year? No, it cannot happen. It requires some time. If you say, name any company, popular company.
Tata.
Okay, Tata. Do you think so? Tata, they have got almost all the different types of products, right? Tata manufactures. If you say in the first year, Tata, it got established, I don't remember when it did, but main thing is, did it acquire every business in 1 year, in a single year? Do you think so?
No.
The example, suppose Tata came in 1960. Okay, example I'm giving. So by 1961, did it acquire the whole market? Did it acquire means everybody knew about Tata?
No.
In 1 year? No. If I come to 1970s, so in this 10 years, yeah, few people have not. But if you see, I ask you to tell anyone, name of any one company, and you have selected Tata. That means that is the popularity of Tata. Got it? So that is what we call wealth maximization. From one product to various products you can start manufacturing, or maybe one bike. Tell me any name of any one bike company, automobile company, or bike company.
Java.
Okay, I'll say example Java. Java, do they manufacture only a single model?
No.
No, they manufacture various models, right? Yeah, suppose they are manufacturing 3 models. In future, if you see, are they going to continue with only these 3?
No, there will be upgradation.
There will be upgradation, or maybe some, any new, chances are that new bikes may come with new features, right? Maybe from 3, it might increase to 5. This is what we call wealth maximization. Overall, the size of the business you are increasing. Maybe earlier you had 5 shops. What do we call shop? Showroom example. You had 5 showrooms. Now, after 1 year, you have increased it to 20 showrooms. That means, did your profit increase? Profit has increased, but along with profit, your wealth has increased. Got it? This is the importance of income statement, or why do we need it. Okay. Now next
Okay.
thing is, this is about income statement, that is P&L and trading account. Next important thing is balance sheet. What is balance sheet?
Balance sheet is prepared at the end of accounting period
Okay, at
to
the end
know
of the account. Yeah,
the financial position of business.
to know the financial position of the business. So what are the components of balance sheet? We have discussed assets, capitals, and
And
liabilities.
liabilities.
Yeah, this is what we call bookish thing. Okay. Yeah, these
Hmm.
are things. This is the reason why we prepare. Now, why do we need to prepare? You have said, what did you say? Could you please repeat it again?
To know the end of the accounting period and financial position of the business.
Financial position. How do you determine the financial position? Suppose, what if I say our liabilities, if I've got more liabilities than asset,
Hmm.
what can I say? That is my company good or bad?
Liabilities.
Yes, I've got more liabilities than asset. Generally, we say balance sheet. That means your asset and liability side should match, right? But I have said liabilities is more than assets. So now tell me whether my company is growing or is it declining?
It's
Okay,
growing.
you're telling it's growing. We'll see if it is growing or it is declining. What is the meaning of liability? Tell me. Basic English meaning. Tell me. What is the meaning of liability?
The firm which has to pay.
The firm which has to pay. If I say, firm needs to pay electric charges,
Hmm.
electricity charges. So is that electricity charges a liability?
Yeah, it's bills payable.
Okay, you are telling bills payable. You mean under bills payable, electricity should come, is it?
Yeah.
Okay, we'll see now. Okay, tell me asset. What is asset then? What is asset then?
Asset means property, enterprise, economic resources.
What are economic resources? What are the example? Tell me an example of the assets.
Land and building,
Okay, land and building.
plant and machinery,
You're telling plant and machinery.
furniture,
You're telling furniture.
office equipments.
Okay, office equipment.
Yeah, that's
That's
it.
it. So these, if I am not wrong, maybe we call it fixed assets, right? Also fixed assets, or we call it non-current assets. Other than this is what we call basically, tangible assets. We do have intangible assets as well.
Yes, goodwill,
Hmm.
patents,
Okay.
trademark,
Hmm.
copyright software.
Okay. So you have discussed about bills payable. That means electricity bill, which we need to pay. According to this, we also have a component called BR, bills receivable. What does it mean? We'll be receiving electricity
The
bill.
amount received by the owner.
That means suppose we are the owner. Okay, you and I are running a business. Now we need to, does this bills receivable means someone is running from our electricity and they'll be paying?
No, we should pay.
Bills receivable, bills payable, you said it like that. How about bills receivable? Does it mean? According to you, that means here, if we pay electricity, we call bills payable. Here, in that situation, if you say, that means electricity bill will be receiving, is it? Yes. I'm doing a business of pen. Why do I need to collect electricity bills or electricity charges? That means the whole thing what you have learned is, in that few things are not correct. Example, bills payable. Bills payable does not mean our electricity bill, water bill, these things. Got it?
Mm.
Now, let me, we'll see it in the further classes what exactly bills payable is. But as of now, understand electricity charges is not a part of bills payable. Just cause we call bills payable, no. Bills payable is also known as trade payable. Okay, we'll see it in the next classes. But because it is a bit, basic things. Okay,
Yeah.
so we are into liability and assets.
Yeah.
Liability is something, if I ask what is liability, you just need to say that it is a type of obligation, right? Obligation. That means if there is a liability, that means it is a tension. If there is asset, that means it is a good thing. So whenever we have got liabilities more than asset, that means the condition of a business is not good. Got it?
Yeah.
This is how we determine. Now coming to balance sheet, why do we need to prepare? We don't prepare balance sheet only to analyze what is the profit or what is the loss or what are the components, what are the assets which are present in our business. No, it is not like that. How it is performing in the market. For to if Java is manufacturing bike, what are the who are the competitors of Java?
Royal Enfield, KTM.
Exactly, all those, they are also competitors of Java. So that means to compare both of them, right? One year maybe one, a bike of one company or one brand, it'll be increasing. The other company, it will decline it. Is it possible? Yeah. Next thing, you know about share market?
Share market.
Yes.
No.
Share market, you don't know. You would have studied in first P about share prices.
Share prices.
Share prices you would have studied, right? What is that share prices? Share prices, equity shareholder, debit to share application account, share capital account, all these things. Isn't it? You studied?
Yeah, I have studied, but I don't remember.
Okay. Because you don't know the meaning, that is the reason you don't know. Share price, it is a, we call it a part of the company's, value. Got it? Example, even though if you suppose there is a company, Tata company, if you invest 10 rupees in it, how much?
10.
10 rupees as a share. Okay, share. Even if you increase 10 rupees in a company, does it mean anything? It does not mean, right?
Yeah.
Doesn't mean it. What I mean to say is, does this 10 rupees, what is the turnover of Tata? Suppose how much they'll be earning. Suppose 10,000 crore they are earning. Example. In front of this 10,000, what is the value of this 10 rupees? Do you have that much of value?
No.
Even though you are, the money, it does not count that much, but you are a part of company. You are a
Part of the company.
You are a part of company, because even though you have invested 10 rupees, but you have invested. Got it? This is what we call, when we purchase these shares, that means we are taking a part of the company. It can be 0.00001%, 0.00001%. So from Tata, you own this much. Got it? This is what we call shares. Now coming to here, balance sheet. You getting?
Yeah.
To increase the share value. To increase the share value of
Share
the
value of the company.
Exactly. So that if there will be more share value, that means your company will be running good and more people will be knowing. Example, if suppose, how do we know Tata? Because it is running good in the market. That is the reason. Got it? That means whenever we have got more assets, whenever we get more assets than liability, our company is performing good.
Good.
Yeah. Getting?
Yeah.
These are things you have to know.
Yeah.
Now, apart from this, I asked you a question.
Hmm.
You said, what is the definition you said? Identifying, analyzing, interpreting, all those things.
Hmm.
Could you please repeat it again?
Accounting is the process of identifying, measuring, recording, transacting, and communicating.
Okay. That is, it is written in the books, right?
Yeah.
If I ask, I am thinking to purchase a, I'm thinking to purchase a Java bike.
Hmm.
Is the Java bike your favorite?
Yeah.
Okay, fine. Now I'm going to purchase a Java bike. This I thought it. So I saw that it is cost. What is the cost of Java bike?
170 lakhs. 1.70.
1.7. Okay, 1,70,000. Is it?
Hmm.
Yeah. Now tell me, I'm just thinking of purchasing the Java bike. Now, can we say it is a part of accounting now?
Yeah.
Okay, you are telling, yeah. Let's see. This situation one. Second situation, here I was only thinking, right?
Hmm.
Second is, I purchased a bike.
Hmm.
Purchased a bike,
Bike.
rupees 1,70,000. Is it a part of accounting now?
Yes.
You are telling,
Purchase.
okay. Okay, you are telling purchase. Now, whenever you read something, we generally have to be careful. Okay, when we say identifying, which is the first word? Identifying. First, we identify whether it is a part of accounting or not. Whenever there is a transaction of money, only when the transaction happens,
Hmm.
that time we call
Purchase.
it is accounting. If we
Hmm.
think anything about purchasing or we are thinking that we'll sell it, no,
Hmm.
it is not a part of accounting.
Hmm.
It is not a part of accounting, but only when we purchase it, maybe on down payment basis or on any other basis. There are
EMI.
many ways, right? EMI basis. For EMI you pay down payment. Then next,
Hmm.
what are the other, maybe cash basis or anything
Hmm.
basis. When you purchase
Card
that time,
transaction.
yeah, so that means the transaction is happening, right? The
Uh,
money is going out from your pocket,
yes.
and the owner of the bike, he is receiving the money. So whenever the transaction happens, only then we call it is an accounting transaction. In the first scenario, you said yes, no, it is not. Whenever we
No.
think,
Wrong.
yeah, until and unless it has happened, the transaction has happened, let it be on credit basis or cash basis, right? When we say EMI basis, that is also a type of credit basis, right? You will be paying it later.
Hmm.
So the transaction should happen either on credit basis or cash basis, but it should happen. If it does not happen, it is not a part of accounting. Got it? Yeah, the first word, when we say identifying, that means we identify whether it is a part of accounting or not. If it is a part of accounting, we take it. If
Hmm.
it isn't a part of accounting, we don't consider it at all. Now, if I ask you what in these two situation, which one will reflect in your balance sheet? Can I say just you have thought that you will be purchasing a bike? Will it reflect in your balance sheet? Is it going to reflect in your balance sheet? Can you write on the asset side of the balance sheet that Java bike thought of purchasing a Java bike 1,70,000? Can you write it like that?
In asset column, we can write.
You can write it. Okay, wait, I'll make a column. Okay, this is asset column. So how can we write? We say amount. Sorry. Assets. Under assets, we have got
By bank account.
particulars amount. Okay, now I'm only talking about the asset in balance sheet, how it should reflect. How will it reflect? Can we say that thought of
Purchasing Java bike.
purchasing a Java bike, 1,70,000. Can you say it?
Yes.
Yes. Again, you are not getting. Only when transaction happens, we say it is a part of accounting. If transaction, if the money related transaction does not happen, we don't consider it. That means this thought or anything you think, it should not come in balance sheet or anywhere in accounting. Accounting balance sheet or let it be P&L. Got it? This is situation one. That means situation one cannot come.
Situation
Situation two
purchased.
should come. So we have purchased
Purchased.
it. In balance sheet, how we do it is we write vehicles under vehicles, right? Yeah, under vehicles we say, what is that? Bike, Java bike.
Purchased Java bike.
Yeah, we don't say purchased. Purchase comes in cash book. So purchase Java bike. This is what it reflects. Okay. So whenever you read something, you have to be careful. So first word was identifying. Which was the second word?
Purchasing.
Definition of accounting.
Identifying.
Identify, done. Understood?
Yes.
Next word.
Measuring.
Measuring. We measure what is the